G'day, Romeo Will. Xero, yes, we use Xero for a lot of our clients. However, Xero is a phenomenal bookkeeping tool. It's great to manage your compliance, deal with your BAS, keep your accountant happy. But as a business owner, Xero falls short in terms of helping you understand your business intelligence and make really great decisions around maximizing your profit and building your cash flow. We have some proprietary tools that we call the Profit Mastery Machine. We're running through some of the details of how that works. Hopefully it adds value to you. Excuse the rooster in the background. His name's Woody. So the whole idea of the Profit Mastery Machine is that we need to understand that there is a fundamental difference for most businesses between accruals-based accounting and cash at bank. As a business owner, you can probably relate to the fact that you have made a particular amount of money on accruals when you look at your Xero, but when you look at your bank account, the number is very, very different. And this is because for most businesses, they use what's called generally accepted accounting principles. When they raise an invoice, that money is accrued, that sits on their balance sheet as an accounts receivable. Same thing with their expenses, their cost of sales. They have an invoice that they receive from their suppliers or their contractors. They then set that until it's ready to be paid. That sits as accounts payable on the balance sheet. For all of these reasons, their bank balance doesn't match the actual income that they've seen on their profit and loss statement. This is very, very confusing, very frustrating, and most accountants do a terrible job at explaining this. Additionally, for most business owners, their pricing structure and their financial model in which they use to run their business has been a guesstimate. They haven't been taught this stuff. They've just looked at the market potentially, or they've just assumed a particular amount that they charge for their products and services, hoping that they are profitable. Potentially they were profitable, but as they grow and scale, they often outgrow their financial model and they don't really have the tools in order to improve it. So the Profit Mastery Machine solves these problems. Firstly, we implement a cash flow structure for our clients that helps them segment their revenue from their GST and their cost of sales, which then determines what we call our real revenue or our gross profit. 2, it allows us to then segment into the 4 remaining buckets where money can go: operating expenses, owner's pay, tax, and profit. And then what we do is we determine, of every dollar that's received into the business, how do we split that dollar between all of those buckets to ensure that that business is viable, is sustainable, and the business owner gets 2 paychecks. They're paid for the work they do in the business, and they get paid for the risk they take for owning shares in their business by way of profit distributions. What we then do is we create a system that allows them to distribute more profit on a regular and ongoing basis, allowing them to earn more money and create wealth faster. What we then do is we complete a process that we call the 7 levers to endless profits. The idea of the 7 levers to endless profits is we need to understand the 7 levers, the financial levers that we have in order to influence our business. As the saying says, give me a big enough lever and I can move the world. The exact same thing happens with your finances. So when we understand these 7 levers, being volume, the number of clients or the amount of work that you're doing or projects that you do in your business, whatever the mechanism is for volume. 2 is price. What is the sensitivity to price on your profitability in the context of your current financial model? 3 is cost of sales or your direct costs. What is the current relationship between your revenue and your direct costs? In other words, what does it actually cost you to deliver your product or service? 4, operating expenses. What are your operating expenses in your business? What have you done to optimize and control those operating expenses? Are there kind of little cash flow bottlenecks that are consuming your profitability, and what can you do to fix them? And then we need to understand your cash conversion cycle, which is your accounts receivable days. On average, how many days does it take you to get paid on your invoices? 2, your work in progress or your inventory days, depending on whether you're a service or a product business. So work in progress is basically once you've signed a client, how long does it take you to get to a point where you can actually invoice them for the work? Or if you're a product business, how many days does your inventory sit on the shelves before you then sell it? And then lastly is your accounts payable days. How long does it take you on average to pay your bills? So when we understand cash flow structure, we understand flow of funds, we understand distributions, and we also understand the 7 levers, we can make some really meaningful changes in terms of profit and cash flow in a business, which then ultimately allow us to build more wealth. Xero doesn't do this for you. And we've spent decades now refining our philosophies and creating tools and frameworks that then allow our clients to make these drastic shifts. And as you saw from that video, many of our clients have seen improvements in revenue and also profit of tens of thousands a month. In some cases, we've had clients, significant clients who do 8 figures or more in revenue, have had hundreds of thousands of dollars a month in improvements in their cash flow. Just goes to show when you've got the right strategy in place of what you can achieve. Zero in isolation is not going to help you fix things. So I hope this clarifies. Hope this has been of value. I'll catch you soon.